Agnico Eagle grabbed attention this fall with its proposed Kirkland Lake merger, and today, Agnico announced a $163 million exploration program along with its Q3. Company CEO is Sean Boyd. Sean, welcome back to Kitco.
Yeah, great to be back.
Sean, what do you want to highlight this quarter?
Well, we've had a couple things. Q3 was a record production quarter. So that's as expected as we've continued to ramp up our mines. What's driven that record production is really the strong base of the Abitibi mines. When you look collectively at Goldex, Canadian Malartic, and LaRonde combined, they produced over 220,000 ounces and at cash cost of under $600 an ounce. And then we had a really strong performance at Meliadine, which produced record amounts of gold. So it's starting to show its potential producing those record amounts. So good, strong production, generating really good cash flow, operating cash flow, $1.69 a share. So again, as expected, strong production, strong cash flow. And then we've also had some really good exploration results as we spend the largest budget that we've had in over 60 years of being in the gold mining business.
Where are you with the merger? You received some feedback from some regulatory bodies?
Yes, we've got approvals in Canada. So as we move forward, the vote is on November the 26th. And then the last piece is getting sign off by the regulators in Australia, which should be fairly straightforward. So we're excited about moving forward and should have everything done earliest or latest early in 2022, but possibility that everything gets done before the end of this year. So we're hopeful that we can get it done by the end of this calendar year.
I want to talk about exploration that you're doing, but first let's just talk about the quarter and talk about some costs. I noticed, it's a theme that I'm seeing that COVID has come back and disrupted some miners. I think about South Gobi Resources. They had the news today about having difficulty shipping into China. Newmont also had some disruptions at its Australian mines. I also noted later in your quarter that you said there was some impacts from COVID at Agnico.
Well, impacts at the Hope Bay operation, and that's a contract workforce coming out of Western Canada, where unfortunately they had a spike in COVID cases in the fall, so that impacted that operation. But when we step back and look at the operations in their entirety, COVID we've managed pretty well in terms of not having it impact in a big way our productivity or our cost structure. So looking forward, what we see, as we said in the press release, is we're seeing price increases on consumables to the tune of about 5 to 7%. So costs have bottomed from an industry perspective, and we're starting to see some price pressure on the consumable side. So that should carry over into next year.
You also mentioned in the quarter that it was kind of broad-based, and you see that happening across the industry, and you specifically noted diesel.
Well, diesel, certainly with the oil price, we're fortunate that the biggest part of our business in terms of diesel consumptions in the far north, we order that a year ahead of time. So we're somewhat insulated in terms of when that starts to impact the business. We also do some diesel hedging. So as we go into next year, I think like most companies, as you mentioned, are starting to talk about what they're seeing from their suppliers in terms of increasing prices, and we're no different than the rest of the industry.
What was interesting too, you also noted the tight labor market because we see much activity in the Abitibi, never mind what is going on industry-wide. You also had an interesting note that you're saying one way to counteract was taking suppliers and turning them into employees.
That's true. And I think one of the things that we've got a bit of an advantage is we've been around for a long time, very low turnover among the workforce, very low absenteeism. So, big contribution from our workers each and every day. But as we look at a tighter labor market, we just felt it important, given the opportunity set we have in front of us. There's a project pipeline. There's ample number of brownfield opportunities. When we can tie up high quality workers, we take that opportunity to do that, which is what we've been doing.
You said Odyssey is on track and the purchase of long lead items remains on target. What are suppliers saying generally about capacity, being able to get your trucks, being able to get your mills?
We really haven't had issues in terms of getting the things we need to keep the projects on schedule. As you mentioned, the Odyssey project, a big underground project. In fact, when that's built, and up and running, it'll be the largest underground gold mine in the country. So we've started the head frame. We had our board of directors up there last week. What they were able to see is the concrete structure of the head frame is fully up now, 97 meters high. So the size of that head frame indicates the size of the ore body that we're ultimately going to be mining with our partner Yamana.
You announced an aggressive exploration program. You said it's the largest in your company's history at 163 million. Sean, why now? You have the merger, which looks like it's on track, and you're going to be adding ounces that way. And then you also noted that there's a tight labor market right now. Why the timing?
Well, it was just based on results. And so we came through last year starting to see really good opportunities to expand our deposits at our biggest cash flow generators, our biggest producers. That's pointing us to more brownfield opportunities to either increase production or extend the mine lives of these big cash flow generators. So it's simply based on results last year that we followed up with the largest budget, as you said, in our 60 plus year history. And we saw some of the results of that at several mines. What we really like about it, it's not one mine, it's multiple mines. As we start to open up those deposits in Finland, we've traced the deposit down to 1.9 kilometers underground. Everybody knows about Odyssey, the underground opportunity there. We've had significant step outs to the east, which indicate that favorable rock structure potentially hosts additional zones there. LaRonde, even after 30 years of production, more than 30 years of production, we're extending 3 exploration drifts to the west on open ground that used to be owned by Barrick, which we now own. Meliadine, as we drill deep, we're getting high grade, good intersections. So when we look across the platform, we're seeing really good upside in those projects. And then, as you mentioned, talking about the merger, Kirkland Lake's projects also have good potential to grow. So when you combine them, look at the size of the combined production platform, 3.4 going to 3.6 million ounces, with a huge chunk of that in Canada. And then when you combine that exploration platform, a number of the main mines in that broadened platform are seeing good exploration upside. So it's going to be unique among the large gold producers to have a lot of value to be created going forward, focused on exploration. You combine what Agnico's spending this year, 160 million, Kirkland would be spending more. Those are the two of the largest exploration budgets in the industry. And if you look at the history of both of the companies, Kirkland and Agnico, both have created lots of value per share based on exploration success, backed up by solid budgets and consistent budgets for many years.
What's the long-term gold production look like at Agnico, Sean?
Well, it's still growing, and it's still growing as we've built the Nunavut base. We're able to continue to expand and grow that production base. We've got expansion opportunities in Finland, which we're working on. At LaRonde, we're into a high-grade zone. Meliadine's also going through an expansion phase. So we've got a platform that's going to continue to grow. When we look at the combined company with Kirkland Lake, meaningful producer, be third largest in the world. The nice thing about that, it's in pro-mining regions, and as we've said already, it's got tremendous exploration upside across the portfolio. And we can see some of that today, and I'm sure we're going to see more updates from an exploration standpoint from our partners at Kirkland. So a lot of positives on the exploration front.
And lastly, Sean, how is gold looking to you?
Gold is stuck right now, and I think it's stuck because investors are still trying to determine what inflation's going to look like as we move forward. And we're in that camp where inflation's not transitory, and we can see prices starting to go up. We can see that end consumer prices are starting to increase. Ultimately, we think that boils back to the average worker who's going to demand more. So what we would see is more permanent inflation down the road. That's a recipe for higher gold prices. So I think what we're seeing now, the gold businesses are doing pretty well, between $1,700 and $1,800 in terms of their ability to generate significant cash flow. That only gets better as we move forward in a rising gold price environment, but the shares are not reflecting that now clearly. So that's the opportunity. position yourself in the high quality names, and you're going to do well just based on the quality of the businesses at this gold price. And when gold prices move higher, you're going to do that much better.
Sean, thank you for speaking with Kitco.
You're welcome. Nice to be here.
He is Sean Boyd, CEO of Agnico Eagle. My name is Michael McCrae, and you are watching Kitco Mining.